there's a lot of pressure on silver in so many ways. And the main way is basically saying, I don't trust government. I don't trust their currency. I trust gold. And gold will be the leader, I'm pretty certain. But again, like in 1980, the spillover in the silver will be spectacular.
Please join us for our next live stream, Sunday, September 4th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, September 4th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. David Morgan, the silver guru, joins us today. David is a widely recognized analyst in the precious metals industry and consults for hedge funds, high net worth investors, mining companies, depositories, and bullion dealers. David is also the publisher of the Morgan Report, a world class publication designed to build and secure wealth. He is also the author of the Silver Manifesto and featured speaker at investment conferences worldwide. And we're delighted to have David join us once again today. It's time to saddle up and silver up for David Morgan. David, welcome back to SBTV. How are you doing?
Patrick, I'm well. It's been a while. It's good to be back with you. Thanks.
Yeah, it's been a while. Glad to have you back again. Appreciate the time. David, inflation, money printing, raising of interest rates, sound financial and monetary pillars. They seem to be shaking, rattling, tearing up at the seams. Now, I know we have seen some of these things before, read about it before. Although, would you say that things are just a bit different this time around?
I think, the tried and true, inflationary phenomena, you can look at it several ways. The two main ways are what is inflation, and that's, excess printing of unbacked, money. Generally speaking, an increase in the money supply without a commensurate increase in the productivity of goods and services. That's a pretty clear definition. But really, what triggers it, and that's more of a psychological phenomenon. It's based on trust and belief. If you believe tomorrow's prices are going to be the same as today's, then you believe there's no inflation or very little. If you believe that prices are going to be much higher a month from now than they are today, then that psychology is hard to wipe out. You can talk about it and whatever. So I think we've crossed the threshold where the Fed from the U.S. did its best to say it's transitory, it's just going to be a blip, it's going away. And once they lost further credibility, because they've already lost so much with most of the people that pay attention, then even let's say, the people that follow what the government tells them to believe realize that, wait a minute, it's not transitory, it's built in. And then you get into, I wouldn't say what's different, but it's different on a scale. So that's the main difference, and I'll explain that in a second. But you get into the wage price spiral. So people say, I've got to have more money, boss, because if you don't pay me more, I can't come to work. It costs too much for gas and to feed my family, so I'm going to quit, or you got to pay me more. So his wages get increased, and then all of a sudden gas and food goes up even further. So it's called cost push. It's a wage spiral. You can call it whatever you want. The problem with the scale is when we really had it rampant, it was in the U.S. the last time in late 70s, 1980, and then Volcker came in and basically put an end to it. This time, it's not a U.S. phenomena. It's global. And what's different this time is not only the scale is so much bigger, the debt load is so much bigger. In the 1980s, Volcker was able to crush the bond market by putting the interest rates up to 20%. And it hurt. It hurt people that lived off the interest of bonds at, whatever it was, 5, 6, 7, 8% before he moved them to 20, because they're only going to get their 8% from what they paid for before the rise in interest rates. But the bonds became worth a lot less. But the point being is we had a balance sheet that could take that and go forward. And now we're at a point where we couldn't ever do that again. So what's different this time is it's global, and the tools that worked last time cannot be used this time. And therefore, we're going into what's often referred to as uncharted waters or the vast beyond. We're not sure how it's going to unfold.
And the Fed, they still plan to raise rates. What do you see as the Fed's, let's call it a red light, where the Fed comes to this red light and then they realize, you know what, we have to stop raising rates, and then they pivot and then they lower rates. Perhaps we see a looser monetary policy. What do you think would be that red light for the Fed?
Well, that's a great question. I wish I had a great answer for you, Patrick. I mean, they can't, as I just outlined, they can't raise rates where it'll do any good. They can pretend and continue to raise rates and then act tough. And really, that's the most morally correct thing to do as far as saving the US dollar. If they really want to save the dollar, they get close to what Volcker did until the bond market had so much pain and so many losses on paper on what the bonds were, but the yields were high enough for the market to say, okay, we trust the dollar again. That's a remote possibility. They could go that route. Or as everyone in our peer group, or almost everyone says, they're going to get so much pain, the markets are going to be screaming, and they're going to say, okay, we've got to pivot and lower interest rates. Well, once that's done, then they're basically throwing in the towel for the world to see, and they say, we're never going to get this debt under control. We're never going to pay off the debt. We're never going to make good on our word. It's like closing the gold window. It's like, well, the trust in the dollar is, just trust us. We'll work it out somehow with no idea, with no way to work it out, no way out. And so trust us. We're going to lower interest rates. Things are fine. We know what we're doing. No, they have no way out, none. And I think if they start to lower interest rates, enough people, it won't be the vast majority, but maybe another, the 1 or 2 or 3% will say that's it. The U.S. has given up. They're going to try to print their way out of this. The dollar is going to become worth less than it is now, worth less and then worthless, toward worthlessness. And that, again, adds to the psychology that's already instilled, which is higher inflation. So they're between a rock and a hard place and no way out. To specifically answer your question, I would guess that I think they'll go another couple of sessions and raise interest rates further. And then I think there'll be a pause, and the pause will kind of be a cue that they're going to probably stop or back off. But again, they cannot get interest rates high enough to really do any good. So they can continue to act tough to save the dollar and get all the suckers to invest in the U.S. And there's nothing wrong with investing in the U.S. if you know what you're doing. But I mean, most everything is overpriced and undervalued. It's overpriced. The value that you're buying is not worth the money you're spending. In other words, the equity markets on aggregate are way overpriced. There's some value there, but not very much. Specific instances. The bond market, basically, you can't trust it, and yet that's where the faith and good credit comes in. That's what everyone trusts. I mean, the whole banking system is based on, the U.S. Treasuries. There's other bonds, but really, it's the Treasury market, and a lot of nation states have backed off. They're not buying Treasuries; they're selling them, and the Fed itself says, well, we want to, tighten our balance sheet. We want to sell some. Well, who are you going to sell them to? If everyone's selling, who's buying, right? So anyway, I think I overthought that question, but it's scary times, and it doesn't mean the end of the world. It doesn't mean a total financial collapse. It doesn't mean any of that stuff. What it does mean is more uncertainty in the markets, more volatility, more prices that you can't really forecast, more businesses going out, more corporates leaving because they're zombies. They do not get enough income from their business to pay the interest on their bonds. So those bonds become worthless. So those zombie corporations leave the scene. So there's a lot happening.
Okay. Is that the Fed soft landing? Is it still in the cards, or has that kind of left the station and disappeared?
Well, I think they're going to continue to talk more than their action. I mean, they continue talking about, tightening and all that, which they are to some level. But, there's a lot on the books that they have to roll over every month. And so, the beat goes on. We'll see. They don't know what to do. Of course, they will never admit that. So I think that by October's end this year, there'll be enough disruptions in the markets that most savvy investors, even investment houses, even the mainstream financial media will have to acknowledge that, there is no soft landing. There's no possibility of a soft landing. And we've got to readjust to a new economic, a new economy, with less goods, less services, higher prices. Goods that you wanted at one time that were readily available become obsolete or don't exist. More tension between nation states where we're going to keep whatever our natural resources are, our finished goods for our citizenry, mostly talking agricultural stuff like Ukraine not shipping out their wheat, that kind of thing. Well, our people need to eat too, and we don't really want your paper for it. We want to keep the wheat, that kind of an attitude. So less globalism is what will be the trend, not more.
If you're enjoying this interview with David Morgan and I, please consider subscribing to our YouTube channel and let the algos know you'd like to see more content like this. And if you would like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. Yeah, that brings up a pretty good point because as we move forward, it's pretty clear globalization has failed. Governments are failing, the money, the currencies are failing, banks are failing. How far do you think governments are going to go to keep a firm grip or of power of control on people?
Well, at the end of any great, society or empire, I mean, at the very top, they're screaming and they've got their guns blazing as a metaphor, and they try to control the emotions and the fear factor as much as possible. So when they are really running out of steam, they make to the casual observer look as if they're more powerful than they've ever been. But it's a point of pulling the curtain back at the Wizard of Oz and seeing all that flame and fury and power is really just a little man behind a curtain pulling levers that doesn't know what the hell he's doing. And we're at that point. So some will see it one way and some will see it another way. I clearly see it as the failing across the board, basically. And of course, I think the powers that be or shouldn't be have a belief in their arrogance, and this is how I see it, that they can see governments fail and come up with another reset and make it more of a totalitarian type of governmental system that's based on technocracy, where the AI knows what's best for you and what resources to make and how to allocate living space and what to manufacture and how to clean the water and all this stuff. Turn it over, to science. Let the technocrats run it. We've had politicians running it for too long. They don't know what they're doing. Our technocracy was going to save us all. And that's kind of what's going on. It's not kind of, that is what's going on. You still see the political, false front, so to speak, the thin veneer that the politicians actually do stuff. But the truth of the matter is the technocrats have been in charge for quite some time. Just look at who's got the most power in social media. I mean, if they could take, and I'm apolitical. I don't really like politics at all, but you can't ignore it. I mean, I take the president of the United States off of Twitter. Who's got the power, the president or Twitter? I mean, it's kind of an interesting question.
Right, that is so true. But David, right now we're battling inflation. If you could lay out the scenario, what do you think comes after inflation? I mean, is it disinflation, hyperinflation, stagflation, or something else?
Well, there's an expression that all inflations end in deflation. So that's probably the most likely. I mean, if you go to where, the currency isn't accepted, like in Zimbabwe, then what do you do at the end? Well, you go to, in their case, you went to U.S. notes, physical pieces of paper that said Federal Reserve note on them, or precious metal. In this case, if the U.S. Federal Reserve note is not trusted, then of course precious metal. There could be other things. It'd be more or less a barter society, at least for a while. Cryptocurrencies would fit in there in some fashion or form. and there'll be alternatives, is what would take place. But as far as the question, deflation, so you see where the fact of deflation and inflation have a lot of similarities, and I know they're different words and have different meanings. But in either case, you have a lack of trust, you have a decreasing opportunity, you have business failures, uncertainty, uh, depressed attitudes, and lack of trust, as I said earlier. Sorry, but so there's not a lot of difference. The difference being that in one place the currency fails, and so you go back to some type of substitute. And in a deflationary depression where it ends, that trend is pretty clearly established. The money becomes more valuable, but that usually takes place in a specie money system. So, like in the 30s, they inflated the money supply by changing the value of an ounce of gold from $20.67 to 35. So after they nationalized the currency, or excuse me, the gold that the people held, so they gave them value in currency, and then they changed the value. So my point is, there is no gold standard anywhere in the world. We're on a fiat system everywhere, and the most likely outcome is a transition. Now, I have to interject here that the powers that want to be, the parasite class, they have got envisioned, as I said earlier, that they can handle that transition and do a reset and force everybody in a central bank digital currency, and force everybody to have a real ID. And, the technocracy is going to take care of it. All you have to do is stand in line, let our little machine figure out what your DNA is. That's your identity. Now your identity is tied to the computer. All you have to do is look in this little box over here, and your QR code is scanned off your eyeball. And now you are who you say you are. And now that we've got you banked, ready to go. You're good to go. The problem is, the more complex the system becomes, the more points of failure there are. Secondly, the amount of unbanked in the world is great. There's a huge amount of unbanked people in Indonesia, in South America, Mexico. It's really the free world, in quotes, the Western nations, particularly, Europe, Canada, the U.S., that are all, for all practical purposes, everyone is banked. So if they want total control, they've got to totally control the monetary system, and that's easier said than done. And so that's why I'm fairly optimistic that the best laid plans of the WEF will not succeed, at least not to the level that they expect it to.
Yeah, because within that word reset, I mean, it can mean a lot of things to a lot of different people. Here we're talking about AI, technocracy taking some control over this reset. But who, I mean, who is the one who's going to be taking over, or deciding what AI is going to decide? Because we already kind of see that in the markets, and with JP Morgan and spoofing. I mean, one day it's going to be AI machines that are spoofing, and then who's supposed to go to jail if the machines are the ones spoofing us?
Yeah, well, that's a question I really can't answer. I mean, who programs it, and then of course the supposed self-learning by observation with all the data. All they do is basically find patterns by looking at tons and tons of data. But the basic architecture would come from Silicon Valley for the most part. China, of course, is very good with their social credit system. And so it's, the old adage about a computer garbage in, garbage out. Well, as objective as they can be, isn't all that objective, at least not initially. So there are biases built into the system, even though purportedly they're not. In other words, they're totally objective. But if you started off with some type of bias that maybe you're not even aware of, and that's inherent in the code, the machine might be able to overcome that. I doubt it. I don't believe that machines can really ever think on their own, but there are people that will argue that. And look, I took one computer science course back when we used, cards that we punched. So I'm not qualified to talk about whether or not that really takes place. What I am qualified to say is that I know enough about complex systems that we are on a trajectory and that isn't necessarily going to hit the target. In fact, I'm pretty convinced we're not going to hit the target. Yet the powers that be trust too much, perhaps, in their ability to see what the artificial intelligence is telling them what to do, how to get there, what's needed, and away we go. I'm going to digress for a second. You might have to help me out here, Patrick. That movie with Johnny Depp, where he became super intelligent in the computer and the dust and all. Do you remember that movie?
No,
I forget
I
the
don't.
name of it.
I don't.
It was kind of an allegory for what I'm saying, but in that movie, basically became a moral issue eventually, and that's the moral issue. It's a big part of it, and very few people talk about it. Do you want absolute free will, or do you want your will to be determined as if you're a robot? As Harari has said, I mean, they have the ability to get under your skin and monitor how you're feeling, what you're thinking, what your blood pressure is. If you're not doing well, you should, change this, take more B vitamins or whatever. And that's scary. I mean, in some ways, you could say it's benevolent. In some ways, it would be. But in other ways, when you let another human control another human to that level, you're playing God. And I don't think anyone should play God except God.
Yeah, amen to that. A lot of uncertainties there, and seemingly riding shotgun with all these uncertainties is the downward pressure of precious metals, notably silver. Why do you think the markets or investors have they really have no fear right now, where they seem to have no need for safety or a safe haven?
Well, you're right. I think it's basically education. I mean, most of the investing community now are well below my age, and they've never seen a real big problem. I mean, the 1987 crash was something that, unless you're my age, you really probably don't even know about it. And that was a devastating, one day event that really woke up the investment community. 2008 financial crisis, and that's what we call it, certainly woke up a lot of people, hurt a lot of real estate investors for a while, hurt stock investors for a while. Yet we came out of it by printing our way out of it. I mean, in some instances, we never really recovered, and in other ways, we did. So it's kind of a mixed bag. Generally, the overall trend was, yeah, we recovered. We printed our way out of it and made the problem much, much worse. So now, as we said at the beginning of the interview, there's no way out. At least I don't see a way out. So the next financial crisis that took place in 2008, the next one taking place by the end of this year is my guess, start of it, is probably going to be much more of a takedown than what we saw in the 2008 crisis. And I don't think we'll be able to print our way out of it.
David, on February 9th this year, 2022, the Silver Institute had said that the outlook for silver demand is exceptionally promising for this year, with global silver demand forecast to rise to a record high of over 1.1 billion ounces. With those numbers, clearly demand for silver is there, yet spot prices, future prices, they're not reflecting that demand. What's your opinion on why it's not reflecting that demand?
Well, that's the way the market's structured. It's basically a derivative of silver. And as what should take place in a derivative is the underlying asset is king, and that the price is derived from the price of the underlying asset, be it commodity like wheat or corn or gold or whatever. Unfortunately, that's not the way the system really works. The way the system works is there's a number of contracts that are traded every day at the COMEX and the LBMA, and that and these contracts get settled in paper 99% of the time. Very little does the actual underlying asset, silver, actually leave hands. Now it has been. I know this COMEX being drained, and all that we hear from Wall Street Silver, and a shout out to them. But but the way it works is the physical metal is not being priced on the derivatives market as effectively as it used to. Let me explain. If you go into the retail market, the markup on just like silver rounds is like $4. Well, what's 4 on 20? A 10% increase is $2. So double that. It's 20%, 25% for retail investors to buy silver in coin form. Maybe a little bit less if you're buying it in bar form. These are unheard of premiums, yet they continue to stay at these high levels. They have dropped off somewhat recently, but they're still extremely high relative to the norm. The norm is 7%, maybe 10, depends what you're buying. You're buying a certain product from a government mint, you might have to pay a higher premium, but nothing like the U.S. mint now, like $14 over spot. I mean, that's a lot of recovery you have to see. You have to see the price of silver move up on a U.S. Eagle by $14 to break even on the melt value, because usually a dealer will pay you melt or maybe slightly more. It depends. I know right now many dealers are paying $9 over for U.S. Eagles. And I've had a lot of my members ask me what I would do. I take advantage of it. I'd take that $9 premium and put it in the silver bars. I mean, really, at the end of the day, you want more silver per unit purchase. And you really don't care what's stamped on it, as long as it's 999 fine. People have a hard time with that concept because there's a lot of people who think, well, it's got to be this, or only trust the mint. I mean, the most counterfeited silver product out there is the U.S. Eagle. That's the most counterfeit. It's not, somebody's silver bar, or, some of these smaller mints like the Austrian mint or the Australian mint or whatever. But I just mentioned that. I'm not saying there's a lot of counterfeiting out there. There's not, but there's some.
Yeah, I hope not. I got a bunch of silver eagles, so I'm gonna have to go check them after after this now. David, I remember though a few years back there was an article that came out from the USGS stating something along the lines where silver is going to be depleted by 2025 or thereabouts. Do you remember seeing that article, and whether true or not, are we looking at a silver supply crunch?
I think eventually we will, yes. I do remember the article quite well, actually. I was working with some people in Florida at the time, and I actually invited Ted Butler down to do an interview with him pre-YouTube. We were a little ahead of our time on, saying that, because we were doing video streaming over the internet from the very beginning. I mean, it was something that we all take for granted now, but there was a time when there was no video streaming on the internet. And that was an opportunity to make some money in the market. But regardless, when Ted came down, we had a chat, and he decided he didn't really want to go on camera at that time, and that was fine with me. But I certainly remember it well. And, there's two things to point out in that article. One, it said that silver would be the first element on the periodic chart to go, I don't think they used the word extinct, but they implied that it'd be the first one that would be in very precarious situation in order to obtain enough. And the other one was the economics, which I really didn't address, because what's uneconomic at $20 silver becomes economic at $100 silver. What does that mean? It means, well, you can't get silver out of the ground for $20, but at $100 you can and make a profit. So it's all based, of course, on the currency system that we have. And as long as people have faith in it, then you're willing to trade those pieces of paper for real silver or gold at whatever price the market determines at the time. And therefore you can run a business based on whether it's profitable to put in all the work and capital expenditure and time required to put a mine into production. So they didn't talk about that in the article. But all that to the side, the amount of silver has been really depleted in the last 10 years, meaning that it's been a huge expanse in the amount of mining taking place from roughly 2005 to present day. So almost 2 decades. The amount of silver mined used to be, up until like 1970, 350 million ounces per year. And then it jumped up to roughly 550 million ounces per year 20 years ago. roughly. And now we're at 850 million ounces a year. And there's more recycling now. Silver's always been recycled to some degree. And there could be a lot more recycling in the future because a lot of silver ends up in landfills that a lot of it could be recycled, not all of it, but a lot of it could be. So, point I'm making in a long-winded answer, I think based on what I've looked at, Matt Watson, some others that are kind of forward-looking in the silver community, the Silver Institute, that we will hit an inflection point somewhere soon, relatively soon, meaning within a lifetime of a person or less, half a lifetime, one generation, where silver becomes very scarce relative to the value it holds. In other words, it's essential. It can't be substituted. It's absolutely required for certain products. And because of that fact, the price is indeterminable for those applications. So there may be, and I think there will be, a point where there's a dual run to silver, meaning industry has to have it to stay in business and investors have to have it to stay solvent. And if those two things do act synergistically, these prices of $20 US silver are going to be bygone. You're going to see much higher paper prices.
Yeah, I appreciate that because I get this question all the time where, if industry starts to use more and more silver and they start pulling it from the mines, the new silver, how much will be left for investors? Will investors be able to go ahead and still buy silver the way that they'd like to get it?
So at some point, absolutely not. I mean, all markets move at the margin, which I've said 100 times, and the margin is investment demand. The amount of jewelry, silverware, and industrial demand is pretty steady. Yeah, in a recession, you're going to use less, but it's inconsequential relative to how much demand there could be on the monetary side. If you go back to 2020, over 500 million ounces were bought for investment purposes. We've never seen anything close to that before. So that was in 2020. What about 2023 when the stock markets are going down, the real estate markets are not doing well, the bond market is questionable? Where are you going to go? Well, Ghostbusters. You're going to go to the precious metals. You may go to crypto. You may go to both. If cryptos are having a hard time at the same time as the NASDAQ falling, which there is a correlation there, John Perez, who's someone I interviewed on my crypto conspiracy series, I mean, he's got an expression. When Bitcoin dies, silver flies. He's gone as far as to call the silver PSYOP, that most of the money that's in cryptos would have initially gone into gold and silver, but with the allure of the crypto world, there was another place to put those speculative funds. And if you look at the market cap of some of the top 10 cryptos, I mean, that's a lot of fiat that's found its a home in that genre, whereas that genre didn't even exist until about 2009. So I think there's some merit to the idea of a silver PSYOP. I mean, I like to use the word kind of in fun, but it is a psychological operation from the aspect of, oh, gold's no good, you need gold 2.0. This gold you hold in your hand, that coin, that's passe. You got to have it on your wallet, and that type of thing. But, I'm a big believer that the quality of gold in a Bitcoin is 0 carat, and the quality of a gold coin is 24 carat for a gold maple, for example. There's a big difference between 0 carat value and 24 carat value.
This whole silver PSYOP, uh, is part of it. Let's just say the silver to gold ratio, where right now it's at about high 80s, low 90s, somewhere around there. But it's by price. It's taking the gold price and dividing it by the silver price, and then you have the ratio. So this ratio is based on price. Previous to that, when we had that 16-to-1 ratio, that was more or less a ratio of silver to gold in the crust of the earth. And with miners telling us the ratio is now about 9-to-1, 8-to-1, do you think at some point it's going to bifurcate where we get away from a price ratio and move back to a sort of a crust ratio?
It's possible. The only reason, and I've thought about this, and it took me a while to reach the conclusion I've now had, and that is, gold and silver trade at the natural ratio for thousands of years. And for those thousands of years, they both serve the same purpose. and that's money. So you could make the argument that silver's highest and best use is as money, not as an industrial commodity. Because when it's thought of as an industrial commodity, the ratio has gone above 20 to 1. I mean, if you go back in time and plot it out on a chart for the last almost 5,000 years, silver's never got a higher ratio than 20 to 1 for thousands and thousands of years. Now, well, David, that you're just talking history. Yeah. So it's only been in the last 120, 130 years where it's gone above 20 to 1. And that's when silver's been demonetized. It's not money. We say it's not money, therefore it's not money. And yet I could take a silver quarter right now and I could go into any store and put it on the counter and buy something with it. Now, of course, they're only going to give me 25 cents worth, which I don't know what you could buy for 25 cents anymore. But it's currency. It's still valid. You could use it. I mean, who would? Because the fiat value of it's about 10 times that much, about $2.50. But nonetheless, it's still money. It really is. But very few think of it in those terms. And most of your, let's say, more establishment types that analyze the silver market really analyze it from a commodity-only aspect, like they would wheat or corn or something like that. They don't look at it as a monetary asset. The banks certainly don't. If the banks looked at silver as a monetary asset, the price ratio would probably be the natural ratio or greater. In other words, 5 to 1 maybe, because its value would have to be so high from where it is now to be of any substance to a bank. Why would you store something of such small unit price when it's not going to help you monetarily? And of course, that's why one of the reasons I believe that it was basically removed from the monetary sphere. Because if it was treated as money, the price would be a hell of a lot different than it is right now. And that leads to the final statement, and that is when enough people vote with their fiat that it is money, nothing can stop it. We could get to, a higher price, 20, 40, 80, might double, redouble, and double again. I don't know. But I do know when the run to gold starts, it'll spill over to silver. It'll be global this time, not U.S. only. And maybe, as Mike Maloney said, get unobtainium. You can't buy it at any price, especially if fiat's failing to the point where people don't trust it in the aggregate. The main bottom line with almost everyone is I don't trust fiat. I have to have something else. If we ever get to that point, then what are the dealers going to do? Are they going to sell silver? Why would they? If they don't trust the cash they're getting for it being worth anything the next week, they'll close their doors, and whatever inventory they have, they'll keep it. Will they get to that extreme? I don't know. I'm not making the case that will happen. I'm just making the case it could happen. And we've never been in these waters before. As I said earlier in the interview, we are in uncharted waters, and we are in, regardless of what the powers that want to be think, doesn't necessarily mean that's what's going to take place.
Yeah, so true. Just to add to that, there was a time in Egypt where the silver to gold ratio is actually 1 to 1, and then it was that 16 to 1 for thousands of years, as you said. And I'm bringing this up because I saw a chart. It only went as far back as the 1700s, and it maintained that 16 to 1 ratio all the way until about the 1890s, and that's when the Sherman Silver Purchase Act came into play, and silver has never ever maintained that 16 to 1 ratio since. And I guess that's where it went from that crust ratio to a monetary or price ratio.
Well, a slight tweak on what you said. I mean, it's not really invalid, but the natural ratio in the 3,000 years ago was about 12 to 1, and it traded at 12 to 1. And it only got to 16 to 1 after the Bank of England went back on the gold standard. Sir Isaac Newton basically said the ratio should be, looked at it in the street, it was about 16 to 1. So that's what I call the monetary ratio. And you're right, it's been that way for many, 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 many years. But that was established by man rather than the market. If the market was able to float an ounce against an ounce of gold, an ounce of silver, the market would have determined it was 16 to 1 on one day, and maybe it'd be 12 to 1 on another day. but that isn't. It was a mandate, that 16 ounces of silver is equal to 1 ounce of gold. But your point is well taken that, we have been out of the monetary sphere with silver for such a long time. And when we were, it's a much higher value relative to gold. And again, my point, I'll repeat it, is that it doesn't take a lot of votes with, yen or euros or Canadian dollars or Aussie dollars, whatever, to vote and say, I'm voting for silver to take it much, much higher.
Yeah, absolutely. See, that's why I'm just the host. You're the expert, so always listen to the expert, not the host.
Well, I mean, look, I've been, I would never have thought 10 years ago, if you would have said, hey, David, is silver going to be at 20 US and, third quarter of 2022? I would have laughed at you. I said, no, I mean, I could, and I'm not an arrogant man, or I don't think I am, but, I was pretty sure that with this much money printing and all that's gone on, which I accurately predicted or forecast, that the price of silver would certainly be more reflective of that than it is. So, the game's not over. There's a lot of pressure on silver in so many ways. And the main way is basically saying, I don't trust government. I don't trust their currency. I don't trust what I'm going to be able to buy. I trust gold. Gold will be the stalwart. It'll be the leader, I'm pretty certain. But again, like in 1980, the spillover in the silver will be spectacular. There's lots of roadblocks for silver, as you know, Patrick. I mean, silver's got a value-added tax in many jurisdictions, and it's got a high premium in jurisdictions that don't have a VAT. So if you're going to buy precious metals and you got, 2,000 euros, you want to buy gold or you want to buy silver? Well, it's kind of an easy choice. You want to buy gold. One, it's a little more stable. It's not as volatile. And two, you don't have to overcome these huge premiums in order to break even. Even with all that deterrent to silver, silver will still move. There'll be people that want it at any price. And as I outlined earlier, there is an infinite demand for real money at some point in the collapse. Some point going to the end or getting to the end game. Everybody wants it that's awake, which may only be 3 or 4%. But if it's only 0.5% now, that's an 8-fold increase. People that are awake enough to say, oh my God, I got to get out of the bank and into gold. And then that's when the phone rings and the person says, well, you should have called us last week. We don't have any now.
David Morgan, before we wrap up, can you let the viewers know how they can follow you or get in touch with you?
Sure. The main website's themorganreport.com. I do fairly active on Twitter. I've got a YouTube channel, The Morgan Report. I'm on LinkedIn if you're so inclined to be a LinkedIn person. Don't really have a Facebook presence. The website's the best place, themorganreport.com. I do have a free letter. It's really not a letter. It's most of the interviews I do. I post them for free. I write stuff in there occasionally. But sometimes we get, let's say a discount on gold or silver. Not much of one, but maybe a lower premium than you might get in other places. That's rare, but we do put those out when we have the opportunity. And it's a good place just to get weekly updates, which I do myself, just a real small podcast. I do a review of the financial markets, but I focus more and more on gold and silver in that podcast because, as you know, Patrick, there's so much information. We're in the information overload. And what used to take me a week or so to get really good information to pass on to people, that's like a 3-hour event now. There's so much happening. And I'm laughing because it's hard. It's hard to keep up. Luckily, I have more than me. I do have a staff and some help and all that. But things are accelerating, and they will continue to accelerate as far as I'm concerned.
David Morgan, we appreciate the time and the insights you've given. I hope we can do this soon and want to wish you all the best.
Thank you, Patrick. Appreciate it.
That was David Morgan sharing his views on the markets and precious metals. For more of David's insights, please visit themorganreport.com. If you like this video, please subscribe, share, and give it a thumbs up. We appreciate those greatly. Audio-only versions of this interview can be found on iTunes and Spotify.